to thank each and every one of you for tuning in. It's an honor and a privilege. So Bitcoin's MACD indicator threatens long-term bullish bias as rate hike fears linger. So this is what's going on here, guys. The MACD flips negative. The MACD flips negative. Last time it flipped negative like this, when we had something like this in 1718, this is exactly what happened, and it was the start of an onslaught. I think we're about to have a start of the onslaught here, ladies and gentlemen. Bitcoin's long-term bullish outlook is in danger of being invalidated on technical charts as the cryptocurrency reels under selling pressure stemming from adverse macro factors. The cryptocurrency's monthly moving average convergence divergence, MACD histogram, has crossed below zero, a so-called sell signal indicating a bullish to bearish trend change on the longer duration price chart. There is an unconfirmed monthly MACD sell signal that would support a long-term bearish bias if confirmed alongside a breakdown of support at 37,400. Katie Stockton, founder and managing partner of Fairlead Strategies, said in the past week's research note. Bitcoin traded under 37,400 at press time, having violated the support earlier this month. The MACD must remain negative through Monday's UTC 2359 close to confirm the sell signal. The monthly MACD last crossed into bearish territory in July 2018. The cryptocurrency more than halved to 3,500 in subsequent months, extending the decline from the record near 20,000. That said, technical studies like MACD, which are based on backward-looking moving averages, are less reliable than fundamental or macro factors. Coincidentally, as of now, macro appears to have aligned in favor of bears. Global tightening. Bitcoin is staring at a third straight month of losses and heightened fears of global monetary policy tightening. The top cryptocurrency by market value was trading near 36,960 at press time, representing a 20% drop for January. Price slipped 7%, 19% in November and December, respectively. The correction is driven by macro factors, specifically expected rate increase in liquidity, tightening from the U.S. Fed. The 60-day correlation between Bitcoin and the S&P 500 was virtually zero at the end of 2020. So now it's over 65%. Noel Atkinson, head of Market Insights, Genesis Global Trading, said in a LinkedIn post titled, "Did you say crypto winter?" Last ones of the U.S. Federal Reserve Fed set the stage for fast withdrawal of crisis-era stimulus. Since then, several Wall Street banks, including Goldman Sachs, have penciled in 5/4 percentage point hikes for this year. The market has priced in a 25 basis point hike in March. On Friday, Atlanta. On Friday, Atlanta Fed President Raphael Bostic told Financial Times that the central bank may surprise with a 50 basis point hike in March. Ooh. Speculation is now during the rounds that other central banks may the Fed's lead, complicating matters for Bitcoin and other risk assets. With price pressures being elevated globally, central banks perhaps have a reason to deliver tit-for-tat rate hikes and support their respective currencies against the dollar. A strong currency pulls down import costs, helping keep inflation under control. Fed calls this week. JP Morgan, 5 hikes this year. March, May, 3 next year. BFA, Friday, 7 this year. Every meeting, 4 next year. Morgan Stanley, Thursday, 4 this year. March, June. Deutsche Bank, Wednesday, 5 this year. March, May, June, 3 next year. So that's a lot of stuff to pay attention to. And then I want to go over the Bitcoin chart real quick. Then we're going to go into XRP. Then we're going to go into XRP chart. So Bitcoin's up to this 37,571 and hit that resistance. We're going to see if it can come above that. But with this volume again, we've had one big spike, and that's normal because we just opened Monday morning. It's not uncommon. So let's see how we react to this 37,571. If we act negatively, we're going to come back down and come through 36,881. So you really want to break through this if you're not looking to come through 37,571. It's just that simple. This long-term scale, this looks like a right shoulder, and the 30-minute on a head and shoulders with topping reversal. You could just say that, and then it's going to drop down. So we're going to see how it reacts to this resistance line. This is the key indicator right now. Forget everything else. 37,571 is all that matters right now, whether it's supported on or resisted. That's it. And then I do want to turn something on. So you can see the 200-day. We popped above it this morning. We're using it as resistance, it looked like, but we're going to have to see how we react to this right now. If we're on the top side of this, we could try to do something, but we're going to see if we get some quick wick pullbacks. Based on the technicals and everything I'm seeing, I am not buying into this right now. This would be, I mean, you could certainly try, but we're trying to find some more indicators before we were willing to put our whole stack on this, because this looks like it's bearish. I've been saying it for weeks and months. I'm not going to change it now.